Good morning, ladies and gentlemen. Welcome to the Q2 FY23 earnings conference call of TD Power Systems Limited. This conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nikhil Kumar, Managing Director for TD Power Systems Limited. Thank you, and over to you, sir.
Thank you. Good morning, everybody. Thank you once again for joining us today on our earnings call. I trust all of you have received our results and investor presentation. Now let me start by discussing with you the financial performance of TDPS for the 6 months ended 30th September 2022. Standalone. Our total income on standalone basis for H1 was 4.14 billion versus 3.21 billion over the same period of last year, an increase of 30%. EBITDA for H1 was at 15.89%, including other income. Profit after tax and comprehensive income for the 6-month period was 388 million versus a profit of 169 million in the same period of last year, an increase of 130%. Manufacturing revenues for the first 6 months is 3.94 billion versus 3.06 billion over the same period last year, an increase of 30%. The order book, including Turkey operations, stands at 13.67 billion, out of which 4.43 billion is a manufacturing business and 9.04 billion is railway business, and 0.2 billion is a Turkey business. Export and deemed export, excluding the railway business, stands at 61%. Order inflow. We have a total order inflow for the first 6 months, an increase of 22% over the order inflow over the previous period. Our total order inflow is 3.83 billion in the current year versus 3.14 billion in the previous year. Order inflow from exports and deemed exports is 2.16 billion versus 1.63 billion
Sorry to interrupt.
the previous year.
Mr. Kumar, sir, your audio is sounding a little muffled.
Okay, so I'm going to come closer.
Yes, sir.
The order inflow from direct and deemed exports is 2.16 billion compared to 1.63 billion in the previous year, an increase of 32%. Project business revenue in Q1 is 0.1 million versus 0.12 billion in the same period last year. Our total income on a consolidated basis is 4.3 billion versus 3.95 billion same period previous year. Profit after tax and comprehensive income for consolidated basis is 385 million versus a profit of 242 million. Last year included 20 million exceptional income in 242 million. This is an increase of 59%. The Concall order book stands at 14.08 billion. We continue to maintain a strong cash position of 1.97 billion rupees. Now let me move on to the order book, market situation and guidance. Market conditions and guidance. Overall, the demand for our products are very strong in India and across the world. The market penetration that we have been able to achieve over the past years has been instrumental in ensuring that we have an increasing order flow. In addition, the macro conditions are favorable with power shortages both in India and Europe and increased thrust on renewables. For this financial year, we are on track to have around 8.05 to 8.2 billion manufacturing sales from TDPS India and around 0.2 million from TDPS Turkey. We expect gross contribution to be in the region of 30 to 31% for this year, which will result in EBITDA, including other income, on a standalone basis of around 16%. EBITDA for H1, as mentioned earlier, is 15.89%. We expect to keep the EBITDA at the same level as H1 or slightly improve to 16+%. In Q3, we continue to see a robust order book, which ensures good growth for the next financial year. In general, my commentary from this point will be more forward-looking in the next financial year, since we have clear visibility for this year. I've already given you a guidance for this year's performance, so now I will gradually shift the focus into next year's business plan. Let me talk about each segment briefly. Steam turbine. We have strong demand from India and the rest of the world. This year we will achieve our highest sales ever in the steam turbine segment. The order book for next year is also very strong, with all our major turbine customers forecasting strong sales. This applies to both India and out of India. Segments are garbage burning plants, process industries, waste to heat recovery, and to a smaller extent in India, we are seeing the traditional captive coal-fired power plants. We also have 3 numbers of large 2-pole generators with about 60 megawatts for next year, and expecting an order for at least 2 more. We have completely indigenized the rotor production. Earlier we were buying the rotor from Germany, and with this we are competitive as well as profitable. Hydro. Next year order book is filling up. We have a pending order book for next year, which is almost equal to this year's sales in hydro. There are plenty of new opportunities in the market, and we're actively competing in all parts of the world. We see a good year next year for hydro. Particularly in Europe, there is a big push for small hydro, and the inquiries have increased dramatically. Gas engines. We have very good orders and forecasts from both our engine customers. This year, we will have achieved our highest sales in the gas engine segment since the history of the company, and next year's forecasts are showing a significant growth over this year's sales. Aftermarket. We have put a lot of effort to develop the aftermarket to repair not only our machines but also machines of our competitors. This year we will be having the highest sales for the aftermarket business, and we will further expand our footprint next year. Other segments. Railways. With Indian Railways on track, we have dispatched the Indian motors, first 6 motors to Indian Railways. The next step will be to mount the motors on the locomotives, which we are now arranging. And in the next 6 months, after successful performance, we will have reached the approval stage, after which we can start bidding with the Indian Railways for all their tenders. IR Indian Railways new projects. All eyes are now on this 9,000 horsepower locomotive bid. We are hopeful that our partner customer will win this order. The tenders will be open in about a month from now. This is a fast-track project, and production should begin in about a year. This project, once again, will give a 10-year revenue outlook for the winner of this bid. Synchronous motors. We have 1 order on hand, another one is booked. With this, we expect around 50 crores of sales from synchronous motors for next year. There is still a large pipeline of business in this segment, and we will report new order wins as and when we get them. Market development for special motors is also progressing at a good pace. We have our facility approved by Nuclear Power Corporation. Number of jobs are in discussion. We are in the process of getting approvals from NTPC. We are focusing on special applications and large motor capacities. With all these developments, we are really excited about the growth for next year that we can achieve. The company is well positioned in many segments in the market all over the world, and we will see steady and strong growth. Tentatively, we are projecting a growth of around 30% next year with a big upside potential. We will continue to invest in automation and productivity to improve operational leverage to grow EBITDA, margins, and PAT. With the growth expected next year and further operational leverage, we will see expansion of EBITDA margins. We will give forecast to you in the next few quarters. All our subsidiaries will be profitable except for TDPS Turkey, which will show an exchange loss. However, due to lack of sufficient business and deteriorating economic conditions in Turkey, we will suspend operations in Turkey from 30th April 2023. This brings me to the end of my initial remarks. I'll now be happy to address all the questions that you may have. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Jiten Parmar from Aurum Capital. Please go ahead.
Yeah. Good morning. Congratulations on a good set of numbers. My question is basically on the Indian business, or we see that domestic is down from comparable quarter last year. May I know the reason for that? I mean, the sales are down 7%. So despite us having such a strong order book and this thing, were there any execution challenges or what has happened in that? If you can throw some color on that.
Well, we can't really measure quarter by quarter. There could be some deliveries that were required in the following quarters and things like that, but there is no weakness in the domestic market, and it could just be a function of when we generated the required actual delivery dates.
It's mainly due to some postponements. That's all. Nothing to worry.
Okay, great. Thank you so much. And I couldn't hear properly, but are we looking at higher margins for FY23? Is what I heard. Is that correct? Than the 16% which we are guiding for this year?
Yeah, we're going to have growth around. I've already mentioned we're going to have growth around 20% plus. There's also an upside potential. We are in many parts of the market, many segments, different categories, and as you know, we have fingers in many pies. So if as and when we are able to book orders and report the business that we have won, we will see further growth taking place. We're not putting any investment for new capacity, so we will see operational leverage taking place, and so we will have expansion of EBITDA.
Okay, great. Thank you so much. And my final question is basically on the global slowdown. Are we seeing any challenges because of that, or are we going to actually gain market share because of us being cost competitive? If you can throw some color on that.
Yeah, actually, we are seeing a very, very strong demand for our products internationally in all segments, in steam turbines, in gas engines, in hydro. We are seeing very strong demand, and the forecast given by all our OEM customers for next year are even stronger than what we have seen this year. So there is a push towards the kind of products that we make. The market direction, the winds are favorable, I would say, on our side. And our positioning also on a worldwide basis, basically we are positioned very well across the world in many, many areas, in many, many segments. So we are ready to capture the market as and when it's taking off right now. So we're going to capture that in whatever segments that we operate in. So we're very upbeat about what the forecasts are like for next year.
Great. Thank you so much. And I really appreciate all the empanelments you have done over the years, and we are seeing the results of that. So congratulations, and best of luck to us all for the future of the company. Thank you.
Thank you so much. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference call, we request you to limit your questions to 2 per participant only. The next question is from the line of Pritesh Chheda from Lucky Investment Managers Private Limited. Please go ahead. Mr. Pritesh Chheda, your line is in the talk mode. Please go ahead.
Yeah, sorry. Sir, just one clarification. Until last quarter, we were mentioning that the margins in the business will be about 13-14%. Are we saying that margins now will be about 16% for Concall for the year, considering the fact that I think first half we have done a similar 13%, so I was not sure there. And second, on the top line growth, did we mention a 20% top line growth next year? Because your lines were not clear.
Yeah, EBITDA margins are the ones that I mentioned was on a standalone basis, not on a Concall basis. Because if you take Concall basis, we do have our sales offices in Japan and in Germany and the US. So we're not going to see the same kind of EBITDA margin coming from a sales office. Manufacturing business, we have said it is 15.89% for H1. And I have projected that based on the increased sales we will have next year, the EBITDA margins will expand. I've also mentioned that in H2, we will have a slight expansion of this current EBITDA margin. We're hoping to cross 16%.
That's specifically for H2?
Yes, H2, and for H2 it's going to be around 16 plus percent. And next year, based on the 20% growth that we're projecting, it will go even further.
So basically, half of your business will operate at plus 16% margin next year, and the other half of your business operates at whatever 13% margin that you're doing. That's how we should read, right?
No, it's not the way.
We are telling the blended. It's a blended.
Yeah, when you look at the Concall basis, manufacturing business is the main business of the company, and the sales offices are of course we sell generators, but when we report on a Concall basis, the performance of the sales, the subsidiary companies with the sales offices also taken into consideration. So you have to look at the EBITDA margin of the manufacturing business for TDPS India standalone basis to really get the performance of the organization.
Sir, I'm a bit confused because see, the difference between your standalone and Concall is hardly anything. And if you mention that standalone itself will move to 16% margin, then obviously the overall margin itself looks even that number, right?
What are people answering? Can you please take this question?
Yeah. So the difference between margin on standalone and Concall is around 2%. So if the margin of the standalone company improves, the Concall margin also will improve.
Yeah, perfect, sir. That's what I was looking. So you're looking at 16 half year and better than 16 next year.
Yes, in short, yes.
Yes, on a standalone basis, and this will also help in improving the margin on a Concall basis.
And standalone and Concall, there's hardly any difference, so obviously that will be
Around
reflected.
2%. Yeah, around 2%.
Okay. Now, what is the driver of this margin in second half? Is it the gross margin number or is it just the execution number, operating level?
It's both. It's mainly coming out of operating leverage to a lesser extent, gross margin expansion.
It's coming from operating leverage.
Yes, mainly.
Okay. And my last question is, sir, what is the progress on that wind turbine business side?
Yeah, I had mentioned that in the aftermarket business, we have done good business this year. I'm not giving the number. I'll start giving the projections for the aftermarket business from the next earnings call onwards. But we have got a good number of machines, and we have projections for a very good number of machines for next year also. So progress has been extremely encouraging, and now we are well entrenched in the market.
Thank you very much, sir.
Thank you. A reminder to the participants, please restrict your questions to two per per participant only. The next question is from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah. Hi, good morning. See, I had two questions. One was on, we have a pretty concentrated revenue. The top 3 contribute nearly 40% of to our revenue. In top 10, 81%. So, if the market situation is improving, is pricing power, what a pricing power our OEMs would be getting? Are we able to also get better margins or better pricing orders from our OEM vendors? Or how will it happen? Because just some thoughts on that. Since gross margin can be improved 3-4% dramatically from here on.
I don't think that we are going to be able to increase the prices any further in the market at this point of time. So it's we will have to reduce the cost, and we will have to work on operational leverage. This is not the market has reached a stability on raw material prices and other costs. So there is no question on increasing prices to offset costs anymore. But we will improve the gross contribution, as I said earlier, by cost reductions. But most of the expansion of EBITDA margin will take place through operational leverage. And we are investing in automation, we are investing in productivity to further expand our capacity so that we can continue to deliver higher sales within the same capacity and then further increase EBITDA margins. This is the direction in which we are going. So we want to remain cost competitive in the market. We want to keep market share. And we want to increase EBITDA margins by being more efficient in the factory.
Okay. And slightly follow up on the same question. The top 3 customers who contribute 40% of our revenue and top 10, 80% of the revenue, would we be exclusive suppliers to how many of these customers? Okay. And
no, we don't have any exclusivity contracts with anybody. We have good market share with these big customers, but there is no exclusivity. We have to be competitive and have to deliver high quality products, and that's how we keep our market share with these customers.
Okay. And what would be our market share? Is there a scope to continue to grow our market share at these 10 OEMs who are our large revenue contributors?
Yeah, there is a lot of scope to grow.
Okay. So would we be grow above 50% for all the 10, or we will be below or some?
No, this is a difficult question to answer like this. Each customer, there's a different percentage of penetration that we have, and it's hard for me to give a generalized answer saying that this is 50 or 40 or 30. There is scope to grow in the market, and there's scope to increase our market share with specific OEM customers, and we're continuously working on that.
Okay. And one last question, then I'll join for the follow-up. So the Turkey business will be completely shutting down, means 30th April. So will there be some...
I have mentioned the word suspend the operation. So that means we are going to basically cut our costs down to zero or to a minimum level. All our assets are going to remain there. We're going to keep our factory over there, and but we're not going to shut down. We're going to suspend the operations until we see better market conditions. We're going to wait for some time to see if the market conditions improve or not. If the market conditions don't improve after, let's say, 6 months or a year, then we will take the next decision what is appropriate at that point of time.
What is the number of employees in Turkey business or Turkey subsidiary, and
right now
fixed cost will be there?
Right now it's less than 10.
Less than 10 employees are there?
Yes.
Right okay, now. Thank you. I'll join back in.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star in 1. The next question is on the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Hello, am I audible? Hello. Hi, Nikhil. Hi, Nikhil. Congrats on a good number, good quarter this time. Nikhil, I just wanted to understand the synchronous motor part, what you mentioned. Can you repeat that? I could not hear it properly. You said you have one order in hand and something I could not understand. Could you repeat, please?
Yeah, so I said that we have one order on hand. We have closed another order with this, and we expect to do with these two orders, around 50 crores of business next year in the synchronous motor segment. And I also mentioned that there is a large number of orders in the pipeline under active negotiation. Some of them may get finalized in the next 2 or 3 months. They may or may not come for execution next year. So that what we have on hand, we will execute next year. Further orders that we win may or may not come for execution next year, but if whatever we win, if it doesn't come for execution next year, it will come for the execution for the following year. But there is a very strong, big, large pipeline of orders in the market.
Understood. From an order book point of view, would you think that the order book could be as big as the railways business? No, I'm not asking the current order book of railways, but the yearly booking that we do for railways at this moment. Can this be as big in terms of order book?
Steady business, Rohit. It's not a steady business like the railway business where we can say, okay, we will do exactly 120, 130, 150 crores per year. But it's more like, there could be a very large order, and sometimes you could even get 100 crore order in this business. So it depends on what's in the market at what point of time. But we are in the market. We have got orders now, and we're actively bidding for the future. Whatever is in the pipeline. And so it's taken a little bit of time, but we have established ourselves in this segment, and we are going to be very actively getting orders in this segment in the future.
Nikhil, just to understand this a bit more, what are the drivers for this? In the sense for synchronous motors, what drives the end market orders eventually? What activity in the economy? Is it agriculture? Is it general infrastructure? Or
these are mainly large pumping stations required for pumping the water out of rivers and into reservoirs. So this is for irrigation mainly.
Okay.
So they pump out the water from the rivers during the rainy season and store it in reservoirs so that the farming community can use the water during off season. Especially now when we have had so much of such good rains in India over the past 2 years, there is a huge push to take out as much of water from the rivers as possible. Otherwise, it all flows up to the sea. So we are seeing very, very strong demand for these products at this point of time.
Got it. Are there other use cases also for this, or are we planning to get into that, or is it largely what is the use case you mentioned? That's only
motors are also used in industry, but to a larger extent, but not on these size orders and not for this volume of orders.
Okay.
And but this is the main business.
Understood. And my second question was on the Indian Railways parts. You mentioned that now they will get mounted on the locos and it will take 6-7 months. So do you expect FY24 to contribute some business from Indian Railways, assuming everything goes right? Or it will be more?
Yeah. See, if we need to get those motors. We are mounted on a locomotive, so it would take, I don't know, we're on the job. It should happen soon. And then 6 months after that, let's say we get to know around June, July next year, and then there's enough of time. Then they're only still at the end of Q1. So it depends on the tenders which are there in the market. But yeah, I am optimistic that we should be able to add some revenues to our business, Indian Railways, from the Indian Railways direct in Q2, in Q3, Q4 next year. That's what we're gunning for. Let's hope it happens. Of course, the main step is to put the motor on the locomotive. It's Indian Railways is a huge, large organization, so it all depends on how fast we can get the next step done. And the sooner we get it done, the sooner we get approved, of course, if the motors work correctly for 6 months. But I think more interesting for us is right now to wait for the outcome of the 9,000 horsepower tender. And we are expecting the results to come in by the end of this calendar year. So we are hoping that our current customer wins this order.
And how big is that from your perspective?
That will be as big as the current order.
Okay. Got it, Nikhil. All the very best, Nikhil. Thank you so much.
Yeah, thank you.
Thank you. The next question is from the line of Dwanil Desai from Turtle Capital. Please go ahead.
Hi, Nikhil. Good morning and congratulations. My question is, if you can, talk a bit about the qualitatively about the impact of what is happening on the Europe energy side on three things. One is the demand for small hydro, waste to energy, and gas engine. Positive or negative, whichever way.
So at this moment, energy prices are at an all-time high in Europe. Extraordinarily expensive per kilowatt hour prices in the market. Of course, this is determined by the fact that gas prices are really high, and so the electricity produced from gas is driving the overall market price because all the prices are set by an exchange. So at this point of time, it is very profitable to have hydropower plants and waste to energy or anything that you're supplying into the grid. So one part of the market is very bullish, and there's a lot of money now going into this because it's so lucrative. Other part is this segment is also benefiting from the fact that Europe has to come up with alternative energy production to reduce the dependence on gas. So that is also driving demand for small hydro, waste to energy, garbage incineration plants, and so on and so forth. On the gas side itself, we are seeing that there is a huge requirement for captive power plants. So smaller captive power plants that people want to be independent from the grid, and just in case there is a blackout or just in case there is a interruption of power. So people are investing in these small gas engines, and so that's also driving demand. At this moment, I think, as I said earlier, the macro conditions are favorable and they're well positioned in the market.
Okay. So this increased traction that we are seeing in all the three segments in Europe, it's largely because of the macro part, or is it also that we are gaining market share, or it's a combination of both?
Yeah, combination of both. I would say larger growth is coming from the expansion of the market, and we're also benefiting from being, our production costs are still not so high in India compared to the increase of production costs in Europe. So we're probably gaining market share also. But it's a combination of both. I cannot tell you exactly how much, what is X and what is Y. It's hard for me to tell you that.
Oh, understood. And second question, Nikhil, I think you mentioned about something about the larger megawatt, 60 megawatt turbine orders and our ability to manufacture that indigenously. And you also talked about some nuclear power related development. So, typically our forte has been, less than 30 megawatt, or our focus has been less than 30 megawatt. So has something changed why we are focusing on larger megawatt turbines in terms of market potential or the market activity?
No, we're not in the below 30 megawatt. Of course, the PDPS generator and our own technology, we go up to 60 megawatt. So this has been our core business. Above 60 megawatt, we have a license agreement with Siemens, and we had made an investment a long time ago to produce the larger size generators, but that investment did not materialize into good sales. However, we do have the products, and so I'll let Vinay now speak a little bit how the market is now developing for these larger two-pole machines and where we are positioned. Vinay, maybe you can throw some light on which way this market is moving and what we are seeing as a business for the next year at least.
Yeah. So we already have 3 orders, as you said, and there are good number of inquiries for two-pole. Unfortunately, for the last 10 years, because of the coal stand mainly, this two-pole business was not good, so that's why we could not make good business in the two-pole segment. But for next year, we are really seeing a good business in the two-pole segment, mainly from our major customer in India.
So just a follow-up on that. So you see this as a one-time event, or do you think that something which is change in the mix which will lead us to have this as a sustained opportunity? How do you guys look at it?
We are seeing the sustained growth in this segment. Now, since
it was zero.
indigenized,
It was 30 machines a year. It went down to zero. Now it's about 8 machines, 9 machines per year. I think this will be sustainable.
And see, our main competitor is BHEL. Since now we have 100% indigenized the products. Earlier we were importing the rotors from Germany. Now we are making it here. So we have become competitive and we can compete with BHEL. That's how we are getting orders.
Okay. Got it. Thanks. Very useful. All the best.
Thank you. We request participants to limit their questions to 2 per participant only. If time permits, you can come back in the question queue for a follow-up question. The next question is on the line of Alisha Mahawla from Envision Capital. Please go ahead.
Hi, sir. Good morning. Thank you for the opportunity. Just one question. What is the reason for sequential decline in gross margins? Because I believe at the start of the year... Hello?
Yeah.
10 to 11 months.
Hello?
We can hear you.
Yeah. Just wanted to understand the reason for sequential decline in gross margin.
Yeah, there is a small decline. I think quarter on quarter there could be some small variations in gross margin depending on the product mix. But overall, we have given the guidance for the year, and we will see improvement in the gross margins in Q3 for sure. And I've already given the guidance for the whole year. So there could be variations due to product mix mainly.
And for the full year, we're expecting it to be in the range of 31 to 32%.
No, I said 30 to 31%.
So, and this is excluding other income, because the presentation has other income before when we're calculating gross margin.
Yeah.
Sorry, is this excluding other income?
Which will include the operating income. It will include the other operating income, but will not include interest income.
Okay, got it.
To include the other operating income, which means things like foreign exchange gains and things like that.
Yes.
Got it. Thank you.
Thank you. The next question is from the line of Ashwini Sharma from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. Sir,
Hello, Ashwini, how are you?
Great, sir. Thank you very much for asking. So my first question is, what would be your current utilization level? Because what I see is that given the strong order book and then inquiry pipeline also looks very encouraging. But then if you look at the guidance of around 800 odd crores for full year, that looks a bit conservative. If you can throw some light on that, sir.
No, so this year we're still keeping our guidance. One of the reasons why we're not being able to move our, increase our sales for this year is There has been a reduction of the production, temporary reduction of this year of locomotives for the Indian Railways, which Alstom is producing. So that knocked out a big chunk of what we could have done above 820 crores for this year. It goes into next year. But in terms of capacity utilization, I said, we have capacity around 1,200, 1,300 crores, and we're constantly investing to push it even further to 1,400. So I don't see a capacity problem coming next year or at all.
Okay. Thanks for the clarification. Secondly, if you could just put more light on the opportunities from motor business, especially from the railways and Vande Bharat. If you can throw some light, how are you looking at opportunities from these two segments? Yeah.
So the railway business is divided into two parts. One is the business that we get from our large customer. Of course, it depends on which bid they win. And we are currently executing the 12,000 horsepower locomotive for them, making the motors of the 12,000 horsepower locomotive. And there are two more bids that the Indian Railways have put in the market. So one is for the 9,000 horsepower. There will also be 1,000 locomotives. And there's another 12,000 horsepower, which is also going to be open. The bid will be open sometime early next year. So these are the two major. This is one major segment. So we're currently executing the 12,000. We're hoping that our customer would win both or at least one of the two new ones which are coming. That will give us, for each of the jobs, that will add revenues equal to what we have right now from this particular customer. Then there is the Indian Railway segment. The Indian Railways produces electric locomotives themselves, and they buy about 1,000 crores worth of electric motors per year. And we want to get a chunk of that. We want to get, my goal is to get 10% of that business, at least. So it's going to be a step-by-step process. The first step is to get the approval. That's the most critical step. So that's where we are right now. But once we are approved, I think we will start bidding, and hopefully in the next 2 or 3 years, we will get to my target.
Mm-hmm. And Vande Bharat?
Sorry, I missed that.
Vande Bharat, sir? You have a JV.
Vande Bharat, Vande Bharat is also in play. But whether we will make these or we will not make these is not 100% sure. The technology level is high for these motors, and it could be that our customer wants to keep it to themselves for these high-speed trains.
So from a longer perspective, let's say next 4 to 5 years, where do you see your motor business going in terms of absolute number?
I'm not going to give a forecast, Ashwini, about this. We can take this conversation offline, and we can talk one-on-one on this. But I don't have a number right now. I can talk about the motor business for the next 4 or 5 year perspective. Share on this call.
Sure, we can do that. Thanks for your answers. Thanks a lot.
Thanks.
Thank you. The next question is on the line of Rajat Sethia from iThought PMS. Please go ahead.
Hi, thanks for the opportunity. Sir, we get 6 to 7 crores of other income every quarter. So what is the nature of that? What is the mix of that?
Vaniyashri, you take this question, please.
So we have interest income of around 2-3 crores. Interest income on an annual basis could be around 8 crores. And the other income is because of the foreign exchange gain on account of our forward hedging of euros.
So how much of it is usually considered is considered operational income and not the typical other income?
The interest income is not considered as operational income. The rest of all the other things are considered operational income.
And how much is that part? interest
4
income?
crores is the interest income, 4.5 crores, which is not considered as operational.
Sorry, what's the number?
4 crores.
4 crores on a quarterly basis.
No, half yearly basis.
Half yearly basis.
Half yearly basis.
Understood.
4.2 crores.
Understood. And talking about the cost structure that we have in place right now, so how do you see the employee expenses and the other expenses growing over the next 1-2 years?
Yeah, so we see the employee-related expenses growing on an average between 7 to 8% per year, which is, I guess, an industry average. The other operational expenses could grow around 5 to 6% per year, depending on the increase in production. So, the growth in expenses will be far lower than our overall increase in sales. So that's how we're going to get the operational leverage.
Okay, so this other expense that you mentioned, 5-6%. So right now it's 15 crores on a quarterly basis. You are referring to the same number, right?
Honestly, 15 crores, could you please confirm?
The employee cost is 46 crores and other expenses is 30 crores on an H1 basis.
Yeah. So Nikhil, you are referring to this 30 crore number, which will grow at a 5-6% rate, right?
Yeah.
There's not much of variable cost here, basically.
Some variable cost is there, but it's not. Yeah, it's not. But it's not fully variable. Let's say partially variable.
Right. And so finally, did we see any decline in the international business in H1?
I'm not. Do we have the number right now?
No, I don't have the number right now, but we can take this call after.
Sure. All right. Thank you so much, and wish you all the best.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Sure. Thanks for the opportunity and congratulations for a good set of decent set of numbers. And on the domestic side, how is the situation currently? How are you seeing orders coming up? If you can throw some light on the domestic situation currently.
Yeah, Vinay, please take this question.
Mr. Vinay Hegde?
Yeah. Can you hear me?
Yes, sir. Please proceed.
Yeah. So domestic side, there is a very good order inflow and a good inquiry pipeline also. So market is doing really well in the steam turbine segment.
Sure. And how do you see the domestic side of the business for us in FY24?
Yeah, as Nikhil said, we did the highest business this year in the steam turbine segment, and also we are seeing a very good year next year with some good two-pole orders coming in. So we are expecting some good growth in the domestic market.
Sure. And Vinay, if you can talk about 8-9 two-pole orders that we have, how much revenue can they contribute to us?
Pardon me?
Yeah, how much revenue can the two-pole orders that we have got contribute to our total top line during FY24?
About
50 crores.
It will be around 50 crores. Yeah.
Sure. And you also talked about the nuclear power, some developments. If you can talk a bit more about it.
Now we are approved by NPCIL.
Yeah. Nuclear Power Corporation, of course, there is a large variety of projects. The large number of projects that they have in the pipeline is they're going to put up a large number of these power plants. So each of these power plants requires a variety of highly specialized motors. So we are now approved and we are bidding for a large number of these special motors for Nuclear Power Corporation. In addition to that, They also require emergency power generators, and we are also approved for that. So as and when Ministry of Power starts ordering for these new equipment, we will surely win some of these orders. It will be a steady. It's not a huge business, but it will be a steady business with very good margins.
Sure. And how big can this orders be, let's say, on an annual basis for us?
I can't give a number to that right now.
Sure. Okay. Thank you, and wish you all the best. Yeah.
Thank you.
Thank you. The next question is on the line of Risha Kansera from Molecule Venture PMS. Please go ahead.
Hello. Am I audible?
Hello. Yes, very much so.
So I just wanted one clarification. Maybe my line was not clear enough. So in the last quarter, you mentioned that for FY23, you'll do a top line of around 890 crores. So that remains unchanged currently also, correct?
On the Concall basis, yes.
Okay, and the 20% sales growth guidance that you gave, that is for FY24.
Yes.
Okay. That's it from my side. Thank you, sir.
Thank you. The next question is on the line of Manoj from Geometric. Please go ahead.
Am I audible?
Yes, sir.
Okay. Sir, can you throw some light on the new initiative that you are doing?
Sir, there's a lot of static from your line. Mr. Manoj?
It's okay, I can hear him. It's fine. I can hear him. It's okay.
Okay. How is it? Is it better?
Much better.
Yeah, it's absolutely fine, sir. Much better.
Okay. So, whatever, like synchronous motor and all other things, new initiatives, they are more gross margin incremental than our core business or similar?
Around similar, sir.
Similar. Okay. And second, this nuclear, I couldn't hear properly. Is it domestic thing or export thing?
No, 100%. This is pure domestic.
Okay. Can this turn into an export initiative also in future? Well, right.
Not likely, sir. Nuclear business is, it's going to be domestic, sir.
It could be domestic.
It could be domestic and only domestic.
Okay. Thank you, sir. Best of luck.
Thank you. The next question is on the line of Nikhil from SIMPL. Please go ahead.
Yeah, hi. Good morning. Hope I am audible.
Yes, please go ahead.
Yeah. Just 3 questions, sir. One is on synchronous motor now. It's been a year and a half we've launched the product. Based on the performance and the costing, do you see that in a sustainable way we can maintain a 15-20% market share in the domestic market, or how do you see the opportunity and market share gain for us?
Market share is, I think we could be around 30% market share, and that would be a good achievement for beauty players.
Okay. And secondly, on the repair, on the maintenance part, on the wind turbine for our own installments and competitors, we had launched a new initiative last year where we were looking at the refurbishment and maintenance. So any progress on that side? Have we won more orders, or because I think last year similar for...
We have won more orders. We have won more orders in the wind repair business. It has definitely increased our overall aftermarket business. I'm not giving a number to this. I'm start giving a number to this for next financial year. How much are we going to do on the overall aftermarket business? But thanks to the wind business, wind repair business, this year we are doing the highest aftermarket business in the history of our company, and we're planning to grow this even further next year.
Okay. And lastly, in the Europe, during the call, you mentioned that because of the issues which are happening, there is a lot of investment for IPP kind of projects and the waste to heat and a complete change in terms of the energy dynamics. Now, if the situation starts improving in terms of the gas cost coming down and things improve, do you see this can sustain for 2-3 years, or is it more of a knee-jerk reaction because of the things which have happened in the near term, and probably it will stabilize at a much lower level? Just to get a sense how you are reading the things, or what's the feedback you are getting over a longer period?
The gas infrastructure in Europe has taken 20, 30 years to build. And replacing the gas infrastructure or even replacing a part of the gas infrastructure will take, not 30 years, but it will take at least 15 years to replace a part of it. It's such a huge dependence they have on gas. So this is not a knee-jerk reaction. They want to reduce the dependence on gas. It compromises the overwhelming part of their overall energy mix. They want to reduce it. They have to make big investments in other areas. There's a large number of megawatts which have to be put into the market to replace this. It's not going to happen in 1 year or 2 years. So there's going to be, we're just seeing the beginning of the cycle. I think it will continue at least for 5 to 10 years. We're just seeing the beginning of it.
Okay. And incremental our market share in our market share, which is what they are talking in this moment.
Your voice is breaking, sir. Couldn't hear your last sentence.
My question was that if we look at the
sorry to interrupt, sir. Your voice is breaking up. Mr.
Hello?
We're not able to hear you clearly. Your audio is breaking up.
Hello? Even now?
Yes. Now it's getting better again.
Just one last thing. If you look at the incremental order flow which is happening, our market shares or incremental market shares will be sustained. Like there are no new other competitors or large any smaller players who are coming in the market. So our market shares are sustained. That's what I wanted to understand.
Market share is sustained. Market share could have increased slightly. I mean, we are seeing almost a 22% increase in the overall order book, 30% increase in the overall order book. So definitely we will see a 22% overall increase in order book. So we will see part of it is market growth, part of it is increase in market share.
Okay, fine. Sure. Thanks a lot. I will come back in the future.
Thank you. The next question is from the line of Prolin from Goldfish Capital. Please go ahead.
Yeah, hi. Thanks a lot, sir, for giving me this opportunity. I have two questions, one on the export side and the second one on the domestic side. I will start with the export part and where the last question ended in terms of market share. Now, in the past, you have mentioned that, there is still some apprehension amongst our customers to use our products, right? And that is, in a way, limiting factor, despite the fact that our price and quality proposition is second to none. So just wanted to understand who are these competitors, and are they also facing some supply chain challenges which is helping us gain market share or helping us crack some of these customers who had earlier apprehension about using our products?
No, nobody's having any supply side constraints anymore in the market. There is enough of steel and copper and other commodities in the market right now. But our big competitors still remain there. They're Siemens, they're ABB, all the big guys are still there in the market. So for us, it is a question of gradually taking away market share by convincing customers to buy our products. And yeah, we have a large number of references, and we are steadily working on overcoming those barriers. It's not going to go away immediately. I think it's still going to take some time. We're not a global brand like Siemens or ABB, so we still have a lot of work to do. But there is a lot of scope for us to grow, and this is our job. This is what we have to do, to grow our sales.
Great, sir. Thanks a lot. That is very clear. The second question is on the domestic part. On the question of export and whatever is going on macro, you mentioned that there is greater focus on captive power. Now, in domestic also, I mean, in India also, we have seen some power shortage during some of these seasons, right? So, do you think that the focus on captive is coming back? Let's say, for example, some of the core industry of cement or metals, are they looking to put a higher capacity of captive power and rely lesser to an extent on grid versus what they would have done, let's say, 2-3 years back?
Yeah, nobody right now is going to put a greenfield or brownfield investment without a captive power plant. Nobody. That's the situation in India today, and nobody can take such a decision, such a risk, even for the next 4 to 5 years. There is power shortage, and there's a volatility of power prices. So people who are putting in greenfield, brownfield for cement, steel, the core industry will put their captive power plants, and they're doing so.
Sure, and I think it's likely capacity be higher than what it was, let's say, 2-3 years back or 4 years back when maybe it were not a power deficit and there was some surplus for some years. Is that also what you are seeing on the ground with your customers?
I don't know if power surplus is. I'll never agree with the power surplus concept, but India is a power shortage country and will continue to be so for a long time.
Great. Thanks a lot, sir. Thank you for answering my question.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Yeah, thank you for being on this call. There are some pending questions. We'll be happy to take them after the call on a one-to-one basis. If you have any other queries, please get in touch with me or with Lakshmi, and we'll be happy to answer your questions. And we look forward to interacting with you at the end of the next quarter. Thank you very much.
Thank you.
Thank you.
Ladies and gentlemen, on behalf of TD Power Systems Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines.